any reflections on your side?
Yeah, thanks. I mean, I guess there's a lot already that's been done, I think, in improving the financial architecture to have allowed us to achieve what we've achieved to date. But if I look at where the opportunities are, I think they're still quite significant. So there is a bit of work to be done to unlock this. And before I come to the financial regulators, I mean, I think from a government point of view, I think, addressing the inconsistencies in policies and regulations, and really understanding the intended outcomes of some of the programs, because sometimes I think it's all fair and well to say, okay, we're going to focus on these communities because mining impacts, particularly when it comes to environmental concerns, but you might end up with just opportunities being located only in one area and I think not going to lots of other areas. So I think there's still a lot of work to look at some of the climate transition plans and actually think about whether the distribution in opportunity sets is going to be wide enough. I think Africa sits with a big opportunity when it comes to carbon credits. And I think we need to get the carbon credit tax market and ecosystems working as soon as possible. And I think in South Africa, that's also one of those, I think those initiatives that seem to be stuck, because once something is between two government departments, okay, and a tax authority, that's when we don't move swiftly. But there is a big opportunity there to unlock opportunities for increased participation. And I guess rating agencies as well have some, we also need a bit of standardization just in terms of how countries, particularly like South Africa, will be looked at, because I guess some of the projects that are starting here, the requirements can't always be the same, not at least on day one when it comes to that. But I mean, I think that is an opportunity that we could participate in a significant way to contribute towards reduction in carbon emissions. And then the one that is quite close to my heart, because financing SMEs are it's such a big priority. I think the work that our finance ministry is doing now to work together with DFIs to come up with mechanisms to solve for this first loss capacity that can unlock financing for SMEs. I think we welcome that. We think it's actually quite significant what can be achieved. But there we need the regulatory environment to support this initiative as well. So I think if we look at the regulatory and the capital we need to hold, I guess, for such structures, because they are seen as tranches, governments and DFIs take the first 20% and we participate in the 80%. If the regulations don't allow us, to take into account the fact that it's, that structure is actually different in its entirety, not a fraction, we limit the ability to optimize. So in some instances, the 10 billion rand from the government could become 50 billion of lending. And then I think for me, what's always substantial is that even the pricing changes a lot for customers. So for unsecured lending, you can talk about a 200 basis point price reduction that can go to customers. So that one is a bit urgent, I guess, on our side when we think about, what the 200 basis point in a lower interest charge can do, and also in the capacity that actually can be unlocked. And then the last one, I think this one is not even a regulatory one, but I just touched on it. But I think finding multi-currency solutions for lending on the continent, particularly for energy transition, I think that is really something that we have to prioritize. I mean, when you've got a subsidiary outside of South Africa, okay, we don't get dollars, we get access to limited dollars, so it's quite difficult to support those businesses and those economies in a meaningful way. But they've got similar needs, and I think in terms of energy transition, you can see how countries like Zambia will have projects that they can get going. But certainly, I think from a DFI point of view, that would really be something that will be game changing for them if I think that that forex risk and the capacity that they can tap into. But I think that's that from a regulatory point of view. As you can see, the list is not very long, because fortunately, I think the partnerships and the relationships we've built are such that we address problems as they come along. But these ones could really be meaningful in making sure that we take further strides forward.
Thanks, Mary. I'll have a word with your supervisor about the problems. So back to you, Remy. So in terms of just looking at the short-run challenges that hinder closer cooperation, it will be useful to hear some reflections. Susan says, well, we need to make more space for the private sector. Mahmoud says there's space for all of us. There are these catalysts in terms of available funds. If we look at public development banks, let's see what else we can do. Any reflections?
So the G20 can do a lot. The first point is we need the G20 to reaffirm and maybe clarify the mandate of public development banks. Reaffirm, of course, as Susan said, is about, sticking, stabilizing all we did about the quality of investment and the alignment with SDGs and climate. That's very important for us. And the second point is the discussion in Baku at COP29 was very interesting, following the lines said by Mahmoud, meaning our institution, we are able to finance what nobody's financing. So that's about concessional finance, sometimes alone. So somehow it's the 300 billion of Copenhagen in Baku. But we are also able to mobilize private finance, and that's and help align other financial flows, and that's the 1.3 trillion second mandate that was born in Baku, and hopefully all our institutions, of course, following quality criteria, should be guided, and maybe their shareholders can choose the share of it in this. Direction, and be able to allocate concessional resources to the risk private sector, maybe more clearly than what we are able to do for now. This is the direction actually set to my own institution, AFD, by the French government now quite clearly. But hopefully it can be a guidance set by the G20. So that's more on the political side. And then, of course, there's a lot the G20 can do to guide the operations. And here my proposal, and probably it will be the proposal from Finance in Common next door, would be to, you did a fantastic job last year under the Brazilian presidency with this G20 MDB roadmap. Actually, the national public development banks are in already. So my proposal would be not to reinvent the wheel, but just to see how far you could extend the ambition, the guidance set by the G20 MDB roadmap. So for instance, we have this GEMS initiative. So we know, and that's what the private sector is repeating all day long, that they need more data to better assess the risk of especially frontier markets. So, and our institutions, I mean, we have data because we are investing, and national institutions, they have data, and they know the markets better than us in Paris. So if we could progressively, of course, extend the GEMS initiative to local actors, that would only help private sector to flow. Another point, of course, is the easiest way to mobilize private finance is to have public banks grow, because there's about 100 out of the 500 public development banks that are issuing bonds on the markets. So maybe one useful guidance would be, could we, in the next 5 years, double the number of public development banks issuing bonds? I mean, DBSA in South Africa was the first to issue a green bond. And so it would help deepen and structure the financial markets in local currency, and then provide the financing that is needed for more quality projects. And then, of course, as I said, attach KPIs to mobilization. I think we really need that. Our performance should be measured not only on our own financing and our own balance sheet, but also on our capacity to mobilize private finance. We're not there yet. Two last points. We commend what the World Bank is doing, this collaborative platform. So we need the MDBs to provide incentives to this ecosystem. And the World Bank, I mean, you need to have a co-financing agreement to be part of the platform and have access to opportunities of co-financing. So that's a good incentive to raise your standards, to set the best procedures internally for fellow public development banks, and reach a higher level of mutual reliance between all of us. I remember you all that I'm an old guy now, but back in 2005 we had this aid effectiveness Paris Declaration agenda, which was so important at that time. So I think we have to revive this. We are too costly, we are too slow, we have to pass the baton between all of us to co-finance way more rapidly than what we are able to do. And my last proposal to the G20 is, of course, to think not only on the financing side, but also on the origination side. And finance in common also could be seen in this regard, and embarking national development banks and even more sub-national development banks at providing the last mile, or would maybe help to have an origination machine that would be wider than the one we have for now, and at the scale of what we are facing. You noted I did not talk about regulation because I'm very cautious about these issues. It can only come after we have done better in the way we operate. I'm not saying there's no issue, especially for maybe for Africa and specific regions, but I think this has to be discussed maybe behind closed doors, between BIS or NGFS, Fundi, and finance in common. Why not? We stand ready for that, of course.
Thank you, Remy. So this is an event at the margins of the G20 Finance Track Deputies. So we can't leave the ministries of finance off the leash, and we've been talking about supervisors, yes. But I think it's useful that we reflect on the role of central banks. We spoke about the currency element. We've heard about the need for coordination. I think one of the things that's also coming up, Susan, as I ask you to reflect, is what Mahmoud raised earlier about shrinking ODA, and how do we think about a world in which ODA is shrinking, and what are the types of things we can do as we look at these differences between actual and perceived risks. So as I ask you to come in, Susan, reflecting on what can ministries of finance and central banks do, it will be useful for you to reflect on some of these issues.
Thank you. There's a lot to build on from what's being said already. So I think governments in the donor countries, I'll say, need to rethink ODA. And I think a lot is happening already. So it used to be $1 of ODA was $1 that could be invested in emerging markets. But the beauty of this blended finance that we're talking about is that $1 of incentives for the private sector can leverage $5 or $7 or $10 of private investment. So this is a very efficient way to have impact. The EC, the European Commission, has set up a new program where they aren't giving ODA, they're giving guarantees. So and IFC was, for those of you from the EC, very grateful to receive some of the guarantee money through the Better Futures program. So guarantees are incredibly effective. So you're guaranteeing against losses in a first loss type capacity. But if the project goes as planned, there aren't losses. So you never actually call on that guarantee. But it's that little bit of insurance to de-risk, as Mahmoud said, it's this magic word right now, de-risk an investment. So private investors, when they're calculating, they say, okay, the risk is less than I thought, given the return. So the use of guarantees suddenly, which can be unfunded on the balance sheet, is an incredibly effective way. So I think that there is a call to rethink ODA. I would also say that there is still a role for some pure grant-like ODA, even for the private sector, and we use it in something called a performance-based incentive. So we'll say to a borrower, if you install this many megawatts or gigawatts of power, you get a slight interest rate buy down. Or if you build X number of units of green affordable housing, you get a slightly reduced rate. If you don't meet the target, then you don't get the interest rate buy down. So I think that there are a lot of interesting new financial vehicles out there. Mahmoud talked about equity, which is incredibly important. It is the most risk-absorbing piece in the capital stack. And thank you for mentioning it, because IFC has just launched the Frontier Opportunities Fund, which is going to provide that junior de-risking equity to climate projects. And IFC contributed $100 million of our own net income from the last fiscal year, and we're out there now trying to fundraise and bring in other partners. And we estimate that $1 of this junior equity from the Frontier Opportunities Fund will be able to attract $10 in private capital. So that's on the donor government side. And I'd add philanthropies. Now, on the recipient country government side, there's, I think, also work to be done. We've talked about local currency risk, which is a big problem, right? If you're investing in the energy sector, your revenue stream is in the local currency. If you're coming from a DFI or an MDB with a hard currency, somebody's got to bear that risk. Now, the best case scenario is when a private investor or a DFI or MDB can actually raise capital in the local market. So in many emerging markets, including South Africa, thank you, IFC can go and issue a bond in local currency. Then we have Rand to lend. Great, there is no currency risk. But it's not a common ability across emerging markets. So here's where central banks directly regulate the issuance from an international organization, either onshore or offshore. We could issue in London because there are global investors who want to bet on a currency, and they'll provide us with an emerging market currency. So that is the best way to overcome currency risk, and central banks have to go through a long set of regulatory reforms in many countries, but this is really a priority. And I'll also say, more broadly, developing local capital markets, equity markets and bond markets is really what it's about, so that the local savers can provide the capital, and again, you get rid of this currency risk. So I think that's one area that central banks can play. I want to come back to GEMS, but I feel like I've said a lot already, so maybe in the next round I'll come back to what this database shows.
Thank you very much. So, Mahmoud, I want to talk about the role of innovation. So some obstacles can be removed using financial innovation, and we have seen this, of course, with the emergence of various blended instruments. So you've already given us a lot of food for thought in terms of what could be done to address the challenges, but I think this is a useful angle for you to reflect on in terms of how financial innovation can be utilized to improve sustainable finance in the coming years.
Right. A great deal of discussion had been there, not new. I see my good friend, Mr. Fandari, from the old days of the World Bank, when we're preparing for Addis, when ideas like from billions to trillions came up, which is basically the super leveraging exercise, and was telling colleagues at the time that that will come to haunt us forever. And unfortunately, I'm proven right. I remember in an earlier piece, we did something about effective mobilization of capital to achieve sustainable development. Long title, boring, not as attractive as billions to trillions, but basically this is the issue. Blended finance, de-risking tools, first loss. If you see the Addis agenda, you'll find them there. But in terms of application, we're missing many of these elements, either because of technical issues or because of having them, but at experimental level, not at the scale that Remy mentioned, to match the gaps that we are requiring. So many of these kind of toolkits, not just at my former employer's toolkit, the World Bank, but I'm very happy to see the Inter-American Development Bank is competing with very interesting toolkit as well on variety of de-risking, insurance, first loss. The African Development Bank is doing the same. I was in Riyadh and Jeddah with the Islamic Development Bank. They are trying to see what could be more fitting to their needs. So, but what is really missing? Because you have these ideas, so it could be really something very basic. It's like the capacity building at the Ministry of Finance, at the central bank, at some of the regulatory agencies that can really be witnessing these kinds of good ideas, but who will be there at the front office of a Minister of Finance to say, well, I really saw that in the website or in a seminar here in South Africa. Can I really have a proposal to apply for it? Can I incentivize somebody to do that in my behalf? And actually, this may sound very trivial, but being in government for 15 years in the past, I know that this could be really a kind of a hurdle. So in what you said in the recommendations on the 5 points that you put, DG, I would say, well, capacity building, capacity building, capacity building, because in many cases, that would either will maximize some of the benefits of some of these kind of new tools that are few of them are few months old, but it's based on first come, first served. And we're talking about ODA. This means that money will be suffering from more scarcity, and they will be subject to more competition. So you have to have more articulated kind of a proposal. Some countries I'm not worried about, without bias of our host here, or my home country, Egypt, or Morocco, or Cote d'Ivoire, many other countries in the continent. But other countries would require this kind of technical support and technical assistance to allow them to do that. In the past, those who are 40 years or older, none of them are here in this room, of course, but you may remember Intel Inside, an innovation of the 1990s, that regardless of the shape or size of your desktop, it will work because Intel is in the machinery. So I would say, being in an investment ministry, attracting IFC to be 10% or 15% in a particular project, that would attract the 85% or 80%, because with an assumption that I hope it's not very generous, that the IFC did the homework, scrutinized the project, check the governance, and check the feasibility. So I would say, well, I can promote that project. I would say another Intel could be having the UNDP. That means it's not just going to be financially feasible with good development impact, but could be as well with some human face as well, taking care of issues related to inclusion or taking care of issues related to impact on underprivileged areas. So here I would say, yes, the partnership may need this kind of finance for innovation, but there are a great deal when we're talking about blended finance or innovative finance that may not just stop on the financial means, but basically through knowledge, technical assistance, and collaboration. And all actually on the examples well prepared by my colleagues on the GFANs, I got confirmation that some of the tools are confirmed, like the new one from the IFC for financing in the frontier markets, or the guarantee by the World Bank, or the digital co-financing portal launched by the MDBs. I would say, well, how many then in our countries applied for these projects? They need the readiness to get engaged, and in many cases, it's not just about finances, basically about some institutional bureaucratic constraints that could really be not helping us to do that. Two final things. I'm very happy and pleased that the World Bank, the other MDBs, the NDBs as part of the Financing Common Network are listening to some advice coming from market. And that's why we see some of the recent innovation. The partnership between GFANs and the World Bank resulted in many good things about the role of the private sector. I'm happy as well being part of the vertical fund, including the Green Climate Fund, the replenishment, that there had been a great deal of complaints. So here your role as government and central bank owners of these institutions, I think the Green Climate Fund, during the replenishment, there were complaints about lack of regionalization. Now I see the new director of the Green Climate Fund celebrating more regional kind of focus, including in Africa. There were some concerns about lack of partnership with the private sector. Again, I see the Green Climate Fund and the CIF, the Climate Investment Fund hosted at the World Bank, doing more and getting themselves listed and launching a new product in collaboration with London Stock Exchange. So it's basically about this kind of responsiveness as we see it, and more market orientation. And I think even with the kind of scrutiny and kind of interesting dynamic that we see us in the landscape of finance, these kind of business-based, evidence-based, with good results and impact, they're not just going to survive, but they will flourish.
Thank you very much, Mahmoud. So we are here, we're having a very focused discussion which touches on emerging and developing economies. But what we have seen, of course, in the most recent past is that you also get significant natural catastrophes that also affect advanced economies. And herein is the conundrum, right? So we're doing a lot of work and we have initiatives. Any thoughts on your side in terms of lessons that we think are there for all countries in general, which are basic hygiene issues? So if you're an advanced economy, maybe you don't have the currency issues as an obstacle. But are there things that you might have observed? And I know that we are in the development space here, but climate is fairly new in the way that it's affecting countries. It affects neighboring countries in the same way, but one is more advanced or more developed than others. But we also have a lot of regional disparities across countries. And so you might find that you're able to attract project funds to more urbanized centers. But you have rural centers that are disadvantaged somewhat. So Remy, I'll allow you to give this one a shot. As my curveball that I'm throwing to this group before we turn to the audience.
The billion to trillion motto was inspirational for sure, but I think it was a bit misleading for the very reason you raised, Fundi, which is we need billions and trillions, I would say. So of course we have to do as much as we can to turn huge, well, machines, financial markets towards sustainability, but we also need to have sufficient capital flowing to frontier markets and emerging markets. And the promise here, of course, can only create more resentment if not satisfied. So I agree with Mahmoud. There are many innovations ongoing. Barbara Büchner is before me leading the Finance in Common Innovation Lab. So there are in the 45 sessions, technical, during the summit next door, there are many of them about innovation. And we are especially working on debt swaps, contingent clauses, local currency risks, of course, taking stock of what's happening, and maybe for emerging countries, maybe from my perspective, the most promising avenue is really carbon markets. So I hope, of course, for a decade it was impossible for us to invest in carbon markets because the negotiation of Article 6 of the Paris Agreement were not finalized. Now, very good news, it happened in Baku last year. So time has come for public financial institutions, and the World Bank and others are doing it, to step in and to play their role a bit like what we did for the green bond market, to finance the infrastructure, to animate the market, and to buy, in the end, credits. And you know, of course, what we negotiated back in 2015 in the Paris Agreement, meaning when you buy credits in a foreign country, it's in your own trajectory. So we know, for instance, in Europe, I mean, we have like everywhere, we are farmers in the street. And maybe it's better to think of where to spare CO2 emissions at a wider perimeter than only the member countries of the European Union. Of course, we had to start with our own effort, and that's what we did up to 2030. Now the discussion will happen in Brussels about next NDC, and what about the target for 2040? My personal view is we should add an international cooperation dimension, because maybe it's easier to invest in South Africa to reduce emission than to do it ourselves. Maybe it's more, and of course, it's very important because it would completely change the narrative. I mean, it's no longer about assistance. I mean, it's our interest. There's a return for us if we develop these markets. And so if in this process in this journey where we are from ODA to sustainable finance, I think the carbon market is the missing piece for now. And I would really invite all of us now to decisively, with private, of course, go in. And my last comment about emerging and developing countries is, of course, we're all talking about the funding side. Problem is, if there's more resources, we need more institutions and developers and projects, as simple as that. And that's where, sorry to come back to national public development banks, but when there's a market failure, you need, for the time being, a public institution to originate projects. And so we have to channel more resources through these guys, and we have, Mahmoud is right, we have to provide technical assistance, have project preparation funds closer to the ground. In Africa, I mean, there's 100 public development banks, but they account only for 2% of the total balance sheet we are discussing in Finance in Common. So they are way too small. And the research, the evidence is that, well, there's a bias. I mean, they are profitable. They are quite valid institutions. So I mentioned DBSA. See, Caisse des dépôts et gestion in Morocco, see BOAD in West Africa, see TDB, we can trust them, or we should invest in them so that they are able, especially when the carbon markets will work full speed, to be able to originate the credits.
Thank you, Remy. Any other takers before I turn to the audience? Go ahead, Martin.
Right. Let me build on that, and again on preparation on the finance for development, as being reminded by Remy, and the preparations as well for the summit here in South Africa and the COP30 in Brazil. I remember this, and it's not my phone number. It's 1155-110. So, and this is coming from one of the reports of Barbara Buchner on finance for adaptation in Africa. 11 billion is the current flows of adaptation finance. 55 billion is basically based on all MDCs, is basically what we require. 110 is basically the independent estimates of what we need in adaptation finance. So that can tell you that we can really still do a lot. But who is doing the heavy lifting? Yes, appreciated all of the efforts coming from the MDBs, the NDBs, the private sector, but still the budgets of the state are doing more. And actually, we need them to do less in areas that the private sector can do more in, realizing their comparative advantage. That comes naturally in this system that's being built again on the finance for development, integrated national financial framework, that we need to have our budgets, including all of these issues related to SDGs and climate finance, and sending the right signals to the private sector without crowding out the private sector when it's needed, and building on more on the opportunities in areas, whatever I can do, in order to get the private sector to invest in infrastructure in unprivileged area in my home country, Egypt. They will never come, whatever I do. But they will be really competing for building another green and smart airport. They will be with tough competition if I give them another opportunity, or the government gives them another opportunity to have extension of the solar village in south of Aswan, the same for Morocco, the same for here. So it's basically this kind of common sense approach on getting that integrated national financial framework. Identify the gaps, get your budgets to reflect the priorities, because if it's not on the budget, it doesn't exist, whatever we talk. And then level the playing field through adequate signaling and do the capacity building as much as we can. And it's good that every kind of vehicle in existence today has a kind of an arm called technical assistance, capacity building, and support.
Susan.
If I may, let me just second everything Mahmoud just said. See, if economists could just run the world without politics, we would prioritize and decide who does what. But let me also just build a little bit on this GEMS database. And I would say, on behalf of IFC and the 26 other MDBs and DFIs that contributed to it, thank you for the external pressure to get this thing in shape, to release it publicly. When we looked at the data, and now I'm just focusing on the private sector loans that we've made, it's really quite remarkable. So since 1990, the losses, the default rate on private sector loans in emerging markets in this database is 3.6%. 3.6%. That's equivalent to a B-rated bond by S&P. Now, not quite investment grade, but just below. So that is really quite remarkable. And when we compare it to the sovereign ratings of the markets that we're in, we see this very large and growing gap. So in middle-income countries, sovereign ratings are 300 to 400 basis points, would imply higher defaults. When you get down to low-income countries, the implied default rate would be around 14% as opposed to a realized 4.3%. So this is quite amazing and should be big news. So investing in the private sector can actually be less risky than the sovereign rating. And I don't know, those of us who learned corporate finance and economics in the Stone Age would have said a corporate risk is always sovereign risk plus some more. But that's not necessarily true. So I just wanted to say that the issue of transparency and helping investors really understand what risk they're taking is very important.
Thank you. As you can see, my panel loves chatting together. Mary, you're the last one. We're going to the audience now.
I think the one, I just have two comments, and I think one is probably to my fellow panelists. I'd be not representing the banking sector in South Africa if I don't put the one thing that really requires ongoing innovation with the financial institutions, and that is just sometimes the requirements when we do access finance from DFIs. I mean, the reporting, the tracking, all the added requirements that we know you need to have in place, but that also is a place that requires innovation. I think if it can be easily accessible, or I think we can get I think a bit improved agility, or just improve the way of work. I think it will also multiply what we can do together. And I've certainly seen encouraging signs, so that's why I know we're quite capable of doing more. But I think that's maybe work that we can do. And then, Fundi, I wanted to come back to where I started, seeing we're having this conversation in South Africa, and seeing that South Africa actually has capital markets. Okay, they're not as large, and they probably won't finance all our infrastructure requirements, but okay, there are capital markets. You do have the private sector with capital. There's still a lot that's attractive about projects that can come in South Africa. And so the policymaker's role is really quite critical in this economic reforms part, in the project supply and making there are projects, because then capital will behave in a logical manner, will follow. So I think this is an additional. Coming in and financing. That's something that we ought to do. But the first starts with just having the projects, allowing the expertise to make sure that these projects are bankable. And I think there's a lot more that can be unlocked in South Africa, and certainly in the markets that we operate in. That is still the number one starting point in many points. Thank you.
Okay, so we've got some roaming microphones, so I'm now turning to the audience. Any questions, comments? Okay, so I've got 1, 2, 3 on this side. Okay, so we can start on the second row, come to the front row, and then move to the back. Right next to you, Shani, is another hand. Go ahead, sir.
Thank you, Madam Moderator, and thanks to all the panelists for those insightful, points that they have put forward. I would like to, build on what Remy just said in terms of the carbon market and the potential. And I do recall that in the communique that we are working on for tomorrow, there is a paragraph on carbon market, and there are huge, inequalities in that market as we speak today. So how do we make sure that we will create a carbon market that will be effective in terms of, providing an equitable treatment to all the parties that are involved? Because as we speak today, African countries are certainly not receiving what they should receive in the carbon market. So how do we deal with that? I appreciate what you said in terms of involving, African multilateral financial institutions to make sure that they are able to participate fully in that market. But how do we make it work to bring, it at the level of credibility that is expected? Thank you.
Thank you. You can go ahead.
Thank you very much. William Rose from France, and I co-chair the International Financial Architecture Working Group. Just 3 points. Thank you very much for the great panel. With the discussion, we see the value of having the public development banks links with our G20 agenda. It's very clear in the Sustainable Finance Working Group when we talk about climate finance architecture, and also in the group I co-chair with our MDB roadmap, and many synergies with what you have discussed about local currency. And just to share with you that it's a work work we will do this year to map different initiatives, TCX, EBRD active in liquidity pool, and also IDB in Brazil. So just to say that it's very clear that there are a lot of synergies. Regarding regulatory issues, I think we should perhaps look at that through what you said, indeed, the efficiency of risk-sharing instruments and the securitization, the different tranches. It's a clear way to look at that from the MDB, efficiency of MDB tools. Last point is about insurance protection gaps. It's also where we could have a great partnership between public and private sectors. So I think to conclude that it's clear that the G20 and the FIX, they need to work more together. Thank you.
Thank you very much, William. We can come to you, sir.
All right, thank you. My question is more for Susan, the IFC, maybe tying into the topic that we have and tying into your last comment on how the private sector actually has a lower risk profile when you actually deeper dive and look into it. But you'll find that in reality, as Mahmoud was saying, countries carry a certain perceived risk, and it has a huge premium attached to it. And what we've noticed is that, unfortunately, the view that international financial institutions then carry to the private institutions is tied to the country rating. My question is, and I agree with Mahmoud, we need to have private sector-led economies. Governments shouldn't crowd out the private sector, should allow them to be the engine that runs the economy. How have the successful countries that have managed to decouple the narrative between the government perception or debt position or whatever it is that's going on with the private sector that can have bankable projects, ring-fenced, maybe export products as well, to be able to tap into this financing so that we don't create a vicious cycle where government is crowding out private sector and then there isn't as much growth as you're supposed to have. I think this is of keen interest, especially to fiscal authorities like myself in emerging markets and developing economies. Thank you.
Thank you for that. Okay, let's just move the microphone further down. Oh, you go on. Go ahead.
Thank you very much, Elena Flores from the European Commission. I just wanted to mention a little bit more one of the acronyms that are there, the Vertical Climate and Environmental Funds, because I think we should now, we had last year this very good experts report with the recommendations. We would really like to see a very concrete follow-up that G20 should take that forward, the same way we did with the MDBs. It should become a clear roadmap, that the funds should be really made accountable, that things are changing. And in that respect, we think it is really important that we stress collaboration between those funds and the MDBs. And that goes for knowledge sharing, technical assistance, project preparation, harmonization of standards across, and really this should lead to improving access, because I think it was mentioned also by the panel how difficult it is sometimes to really access the available funds. And we know that even on these vertical funds, there is money that it is not being used. So when we talk about additional financing, it's yes, but let's also make sure that we use the available one and we make these reforms actually happening. Thank you.
Thank you, Elena. So, Mahmoud, you can kickstart.
Right. I see a couple of direct questions to other colleagues on the panel, but let me just react super quickly. The issue on the private sector, in the way that's being presented, even by some of the MDBs, please get more private sector because you have very limited fiscal space. In the areas related to this kind of dynamic markets, more demands on sustainable solutions, more investments in renewables, areas related to digitalization and AI. I was in government before. I told a couple of fellow ministers just a couple of days ago, it's not just about funding. Even if you have government with surpluses, which happens in the region like in GCC countries. But if you are to be told that these technologies that you are using today could be more cost effective tomorrow, as it happens with solar, this basically, each time we say something about the renewables, especially in solar, they say, well, now the cost is 90% less than what it used to be 10 years ago, or even 95%. So if the technology is shifting fast, public sector doesn't have this kind of agility, doesn't have the kind of risk management, doesn't have the fast risk correction in order to do better. So as I was telling fellow ministers, congratulations, the renewables of yesterday are cheaper today, that you can do really more with less. But the bad news is, if you continue doing what you are doing, you will be ending up simply in prison, because you will be accused of spending public money where it shouldn't be. Leave that to the private sector to risk. Do the kind of stuff in the public investments, in the business environment, and basic infrastructure. The second point is on the carbon markets. Best thing that happened is not the announcement of new funds, the 300 billion, but I think it's the 6.2, 6.4. To what extent our systems have captured the value of these kind of transformation? I'm happy that 3 capitals, including recently in Morocco, Kenya, and Cairo, had engaged with the private sector to see how best they can really capitalize on these changes. Third one, again related to the carbon market, Europe had the most advanced carbon markets, voluntary and compliance. The development that we saw a few years ago in China in developing their own carbon markets benefited from technical collaboration from Europe. I would say through the MDBs, through the finance in common networks, not just ACME, the African Carbon Market Initiative that was launched in Sharm el-Sheikh, but many individual initiatives and countries could benefit from a great deal of technical assistance, standards for integrity, and seeing some sort of real demand in order to activate these markets. The intentions are there, but I think the capacity is very much missing, and there will be even more demand for those who are concerned about demand because of the CBAM, the cross-border adjustment mechanism that could be dealt with, at least partially, through certificates issued in acceptable markets, but with lower cost than where we're going to be issuing in the ETS, which could be very much expensive to African exporters.
Thank you. Susan.
Great, thank you. To follow up on the vertical climate funds, I mean, one very tactical recommendation is to think about the decision-making process. When you're dealing with a public sector loan, it could be hundreds of millions of dollars. When you're talking about the private sector, it could be tens of millions. But yet they have the same approval process, which is very long and lengthy. So what we do at MDBs and at IFC is we have a delegated framework. If a project is smaller, obviously it needs you don't need to go through as many steps in the approval. And that would be a very tactical way to allow the private sector funds from the VCFs to go forward. Now, the question on the GEMS data. I will say that I think that the GEMS data and the very low default rate that we experience does reflect the fact, though, that these are DFI and MDB loans. So we put a lot of work for free into structuring the project financially, building capacity of the project sponsor, often doing what we call upstream advisory with the regulator and government to get the regulations in place. Then, once the project begins, we actually supervise it throughout construction and come back and measure the impact at the outcome. Now, when a borrower looks like they are getting in trouble, we move it into what we call special operations. So we try to work with them proactively before they're in default to see how we can restructure the project. And so all of this is to say, definitely private investors should be investing with DFIs because we bring this whole A to Z approach. And indeed, that is the strategy of the World Bank Group and of other MDBs, is to say we need to move beyond just thinking about our own dollars that we lend out, but mobilizing others. And right now, IFC is at roughly $1 to $1.50 of others, and we want to go to the sky's the limit. And so that will be a shift in culture and a shift in operations, but it's where we're going.
I just wanted to thank Susan for that. Before the banks sit with a lot of pressure, before commercial banks with a lot of pressure, because I mean that kind of cost of risk is not one that we see across the board. But, you know, I suppose the point is noted around more having to be done. And I think where we perhaps find each other and in local markets is looking at project financing. You know, I think that's really the one key thing that we could equally work with. But I mean, we operate in the continent, and I think sometimes the amount of pressure placed on banks, and this is where we come back to remind people that, okay, this is depositors' money we are loaning out, and we've got regulators as well. But I guess on all these discussions, there are certain things that we can do, but with a lot of structuring, facilitation required. But I knew when I heard that IFC's statement earlier on that, okay, there's going to be lots of comments coming our way around limited risk appetite. But I mean, banks actually want to lend money. That is still our business.
Remy?
Three short comments on the vertical funds. The excellent report last year has to be implemented, and our plea is really for one single accreditation for all the vertical funds. I mean, the pressure on ODA, I mean, there's absolutely no reason when you're accredited to the Green Climate Fund, and it takes years, not to be automatically accredited to the other climate funds, and also the Global Partnership on Education, and also the Global Fund. I mean, it's really an easy one. It's up to the governance of these funds and to the governments to decide it. And the money will flow way more rapidly. Second, it's only the beginning for carbon markets, so please encourage us to go that way, especially for Africa. We know the discussion about climate in Africa, but the green economy will be a very significant part of your future. So invest as rapidly as we can in that, provide as public institution a sense of integrity, a sense of equity, of course, and do the animation of the market. I mean, at AFD, we are working on projects where we are financing the CapEx, and then the OpEx are financed by credits to make, of course, the maintenance of it more assured. And my last point, to react to William's point, so there's a paragraph on carbon markets in the communique. I think there's also one on finance in common. So if you could protect, enrich it, give us a mandate, we would be extremely honored and happy. Of course, as William said, to serve as a bit of an echo chamber of the discussion happening within the G20. We will provide case studies for next meeting of the Sustainable Finance Working Group, and we're very proud of it.
So please join me in thanking my speakers, and thank you for taking us through this difficult project. Yeah, so we're losing people, so I'm going to wrap up very quickly. So yes, Helena, yes, Helena, yes, Helena, we heard. We are going to prioritize this work. I think that there's a lot that's also come out from this panel around the vertical funds, including the suggestion of a private sector window and thinking about how we can optimize. I think what is clear is that there's room for everyone, and we must focus on our different roles. And we're looking forward to completing this work on improving this interoperability between the public development banks, the multilateral development banks, and the vertical climate and environmental funds and the private sector. And we look forward to the report that will be ready later this year. So thank you all for your time.